Alright traders, George here with an update for you on the S&P Futures. Let me show you quickly where we've come from and where we will be going. 1616 to 1619, then 1662. These were forecasted new all-time high targets that I had. But when we broke back below 62 here, we actually got up about 23 points higher, and then we broke back below. That really was the initial warning sign here. Then we started to make a lower high here and break below this balance beam. So as soon as that happened, that really put this recent rally on alert. And then with this outside return here, a great opportunity to be short and really looking for that harmonic move down, a classic one-to-one. Could not be any more textbook than that. So a couple of the price points that I mentioned to watch to the downside were 1613, and then down here I mentioned that watch for if we got this low, that we would look for 62s as a slowdown. Watch for it to bottom out by 51. If we break below 51, then that puts a whole new sequence of targets into play. But that's pretty much what happened. We got a slowdown effect here at 62. 51 contained price, and then the pass-through signal, which in this case would be price moving down and then passing back through 62. That's the long signal, and no looking back. All right. Now this is such a great thing to look at because this sell impulse happened right on cue with Bernanke's FOMC testimony on the 19th of June. We are now higher than we were right before that testimony came out. This entire sell impulse has been 100% undone by the bulls. Okay, all the bearish energy that was here, gone. Fantastic, right? The fear, the media, and the traders that are trying to impart where price should go based on a story, all pushed to the wayside where they belong, right? A fantastic example of why you don't want to consider fundamentals in your trading. It does not tell you where you get in, where your stops go, where your target goes, what the trend is, how do you rejoin a trend. None of that. It has nothing to do with a trading strategy. We want to think about if-then around price. There's no better example than what I'm showing you right here. So where that leaves us right now, after we hit 27s and the bulls take over 27, we're looking to go to 45 to 48. We're knocking on the door to 48 right now. We get over 48s and we're going to 55s, and over 55s we'll look to 66.50s. When we get over 66.50, we would have retraced this bearish impulse so much that its energy is gone and it's really in the bulls camp to pop it to new highs. So over 1666.50, very high probability of retesting the highs here and making new all-time highs. 1693 is my next target above our all-time highs, and then the zone of 1708 to 1716. That's as far as I'll take it to the upside for now. But I do want you to keep these price points in mind right here. So we're at 48s right now. There's a bit of an air pocket below where we are, but we've also got some new trading activity that's come into this region as well. So the bulls have a great opportunity here just to hold price in this area and just chisel away until they break above a few more balance beams. If a stronger sell impulse comes in and we get below 1627, that would put the recent rally a bit on ice and give a higher chance of price moving down. And if that's the case, right back to 13. Okay, so watch for 27 to hold as support. We have a bullish market. We have bullish trends. We're having small corrective moves against them. We want to assume that that trend will continue. We are planning and looking forward to rejoin the primary trend, which is bullish. That's what we did down here. And if this rolls over, that's how we can gauge the health of this recent rally. If it can stay over 27, yes or no. That's the most substantial spike. Enormous commitment downstairs below here in the upper and mid 1500s. Another key spike at 82s. The bulls have this thing right where they want it. It will not take much at all to get up to 66s and then retest 85s. I'm looking for 93 beyond that, and then 1708 to 1716. When we hit this here, we're likely to see a resistance swing put in and a pullback to test one of these recent areas as support, just like we did testing the essentially the 2000 high here as support as we break to new all-time highs. Okay, so these are the key price points to watch for now. Make sure you're aware of them. Of course, I'll keep you up to date on this in the live room. But I wanted to get this out to you right now, really because we've retraced that FOMC sell impulse, and it's a great thing to see because it's completely contrary to the quote-unquote conventional wisdom, which is neither conventional nor wise. Remember to trade what you see. All right, we'll see you back in the live room tomorrow.